Welcome to the 2022 Economic Depression and Preparation Channel. I'm your host, Tony. Thank you for joining me on this weekend edition, June 19th, 2022. Happy Father's Day. Happy Juneteenth celebration. Happy Father's Day to all the fathers out there, past, present, and to be. And we're going to get right into it. Economic news today. Of course, we're talking about the going into the inflation, hyperinflation, the recession fears, the Federal Reserve Chairman, and continued rise of rates into July, August, and September meetings. What that means for us as we continue to try to prepare for the upcoming tsunami wave of foreclosures, layoffs, and other things that's going to be coming in slow waves. And that's not counting the black swan events in many of these big cities like LA, DC, Chicago, Miami, um, Houston, etc. So we're going to be facing a lot here, guys. But the good news is that we have time to prepare. We're still alive. God has blessed us this week to see another weekend, and see, with our family and friends, of course. And so I thank you for your support. Please be sure to subscribe to Preach to Me for the latest on financial news in the USA and beyond sometimes. So here we go. We're in with the inflation and recession fears begin to squeeze some industries more than others. Guys, we've seen it. Prices are still up more than they're averaging 20% up, and for gas, groceries, and a range of other goods and services. Airline tickets are higher. Movie theaters, retailers say so far that they've been shielded from a slowing economy. As you know, Delta Airlines came out and said this is one of their times that they're booked up for the summer. Southwest said they're doing well. Movie theaters such as AMC and Regal, they're coming back online. As more people relax, more cities and counties relax the mask requirements now, and everything is starting to get to somewhat the semi-normal. However, McDonald's is seeing signs that consumer demand is weakening. A lot of people go to McDonald's for a quick bite to eat. Young people, old people, everybody in between. When you're on the road or various things like that. For your family, sometimes you go there for their fries or whatnot. They're seeing a slowdown. Target is seeing a slowdown here. This lady's in Maryland. Annapolis, Maryland. See braces for summer sticker shock as inflation continues to grow. Inflation's at 8.7% and growing. I told you it would head to 10% by the end of this month into July. The official inflation numbers, the real inflation numbers are already at 20% now, as far as saddlestats.com is concerned. So if we count food and energy prices. So guys, things are going to continue. How people spend their money, quote, is shifting as the economy slows and inflation pushes prices higher everywhere. So, and even the luxury market is feeling it. And so what we're going to experience is people are going to be cutting back, as well as the Federal Reserve is going to be cutting back on bonds, on purchases. People are holding out on more expensive purchases. Some people now one thing that is going up in the hospitality and travel section is cruise ships. Cruise ship demand apparently is booked, and Carnival and all these other cruises are booked out. But you have to remember, people book these cruises and sometimes family vacations a year or 2 years in advance to lock in the lower rate, the lower prices. So, we're just now seeing the repercussions of that. So that's great news for those industries and those who work in those industries. However, in the movie theaters, if you've seen Jurassic Park or the new Top Gun Maverick, which was a pretty good movie, the Top Gun Maverick, what I've heard, the movie industries has been considered recession proof. And so people are dropping the Netflix subscriptions, are actually going to the movie theater or renting these movies online through Redbox, and stuff like that, instead of buying a Netflix subscription. And then, of course, the media is saying that alcohol is another category that's protected for economic downturns. So a lot of people are stocking up on stuff either at these stores like Costco, Sam's, or ABC, or Fine Wine, Total Wine, or what we call it. They're stocking up on alcohol and wines as a way to kind of use it as a barter, for people, and that may or may not hold out. We have to wait and see how things go. And as I mentioned before, now they're mentioning Delta Airlines and American and United return to profitability, blah, blah, blah. But guys, this can only last so long because the money supply is drying up. The free credit money is drying up because interest rates are going up. Interest rates affect, of course, how we borrow for cars, home loans, construction loans, you name it, credit card loans. These are all going to be going up. And so the Federal Reserve's Waller, quote, according to MarketWatch.com, he backs another jumbo interest rate hike in July, as you can see here. And everybody's backing that now. They raised it by 75 basis points last week. He wants another 75 basis point hike in the meeting in late July. And this is what I'm talking about. Guys, they may even go one full percentage point if things are going to be that bad in late July. I believe they will. This time they will go one full percentage point in July. That's just my opinion. I'm not a financial planner or investor of that degree, but I will say that if things warrant, Federal Reserve Chairman Powell has already said that he's committed to raising rates as high as it takes to get a quell on this inflation. And remember, they're already behind the curve here with this inflation. So right now, inflation's at a 40-year high since 1982 of 8.6%, and it's continuing to grow as we speak. So between now and the next meeting in late July, like I think it's gonna be like July after July 20th, we could be seeing inflation at 10% easily. Official numbers. Now we know unofficially it's higher. So that's gonna be something to look at. Now pre-market. The Dow Jones is below 30,000, as you guys know, according to CNBC, CNN Business, and it's by no means this has reached the bottom, guys. This is not the bottom of the market, as you know. We've been on the last 13, 14, 15 years on a big upswing in terms of inflated stocks, bonds, treasury bills, derivative market, so many bubbles. But this is not the bottom of the market. This is not a dead cat bounce scenario. This is just a slowly letting air out the bubble. So they're hoping for a soft landing, guys, but we're looking at we're looking at a hard landing because a spate of layoffs, quote, is fueling recession anxiety. And this is going to be the big problem. When people lose, a lot of people lose their jobs, and a lot of this, the middle class and some of the lower middle class, and just regular people, working and providing goods and services for a lot of people, when they lose their jobs, this recession is going to be painfully long, because this is what's going to happen, and this may be the answer that's going to prick the housing real estate bubble, because we can't. If I don't have steady employment, I'm not going to be apt to buy a house or to sell a house if I don't have steady employment. And people are cutting staff. Redfin cut 8% of its staff, nearly 6,500 people back in December. Okay, we saw, crypto market, they were cutting their staff. Coinbase in the crypto market was cutting their staff. They laid off 18% of their staff. Airbnb cut back staff. Spotify plans to reduce hiring by 25%. Stitch Fix and Carvana also making cuts. These car making companies and Stitch Fix that we've seen, they've made cuts as well, as I've sold in previous articles and previous videos. So now that means that people are going to go back to online shopping as best they can, whether it's online through Target, Walmart, Amazon, you name it. And then this is not just a pandemic thing. Now, they're declaring that brick and mortar is popular again. I don't think so, guys. Brick and mortar is going to be dying. All these buildings are going to become vacant, and they're converting now a lot of the shopping malls into high-end luxury retail apartments and hotels in a lot of these cities and towns, if you noticed. Because the city has to increase their tax base, because they're not getting as much municipal taxes and commercial taxes as they were before the pandemic. So they're converting a lot of these dead malls and strip malls into either high-end retail shopping or high-end retail living, luxury apartments that nobody can afford. I mean, who wants to pay $2 or $3 grand for a one-bedroom apartment that's smaller than most people's houses? You're talking about one-bedroom apartment, you're talking like 500 square feet, which is absolutely insane. But this is how much they're charging now, because they can do that, because they say that the demand is there in these cities, and it's just going to be crazy. Macy's is still hanging on. There was talk that Amazon that was going to buy them out, but they haven't done. It was just rumors, so they're hanging on. They're going to dodge in bankruptcy, but soon it's only a matter of time before they do. So continue to prepare, guys. God bless. I'll talk to you very soon on the next video, and I'll see you soon.